Hello, John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here once again to give you my honest and professional opinion regarding the 2023 Canadian housing market. So this week I have the national statistics for Canada. I'm going to go over those in just a bit. But first, I wanted to talk about the title of my video, or the title on the thumbnail: Why Now is Not a Good Time to Buy a House. So over the past week or 2 weeks, since the new year came, I've heard a lot of comments and posts from realtors and mortgage brokers too, right? Industry professionals that are saying, now is a good time to buy a house. And of course, if you watch my videos, I tend to disagree at this point, but I just wanted to talk about that for a minute or so, just to give my opinion or thoughts on it. Now, if you read what they're saying, they're not saying now is a great time to buy a house or now is the best time to buy a house. It's just, it's a good time to buy a house. And the reasons for this are, or from what I've seen, seem to be, the market has leveled off. You don't have to get into bidding wars anymore like you did last year. And of course, bidding wars are not normal. That's not a normal market, bidding wars. So that's not a big bonus that you don't have to compete with 10 people. And I think the number one reason, which they don't talk about, is, it's good for the real estate industry and for them if you buy a house. I think now is not a good time to buy a house for many reasons. And this is for people that are jumping into the market, right? Not for people that already own and they're moving cities or provinces or whatever the case may be, but people that have been waiting on the sidelines or first-time buyers and whatnot. So, of course, there's many reasons why you shouldn't be buying. One, we're still in a declining market. The next reason would be interest rates are higher than they've probably been in 10 years. I think 10 to 15-year highs, if not more. Inventory is low, which gives you less options when you're buying. And of course, housing is more unaffordable now than it ever has been in Canada. So it's probably the worst time to buy right now. It will get better, but it's definitely not now. It would be more accurate to say now is a good time to move, or now is a good time to sell, but now is a good time to move. Whether you're renting or you own your house, you can, buy or rent a new house. There's more rental options available now at better rates than they were earlier or 6 months ago. If you're selling, it's also most likely a good time to buy and sell, because you can sell your house reasonably easy still, as long as it's priced right. And of course, you don't have those bidding wars when you buy. So again, I don't agree with the whole push that now is a good time to buy. It's not a good time to buy. It's a good time to move and sell, like I said. Anyway, let's get into one thing before the statistics. This is an article. This guy hits the nail on the head. It's an opinion article. It's with the Globe and Mail. The author does not work for the Globe and Mail. I think obviously he gets paid for his articles when he writes them, but it's a pretty unbiased opinion. And I just wanted to go through it. I'm not going to go through it all. Link is in the description. I encourage you to read it. It's probably the most accurate reflection of the market and where we are and where we have come from that I've read. And I just want to read a few paragraphs from it. So this article's titled "How I Learned to Stop Worrying and Welcome a Housing Crash." And the author's John Rapley, a political economist at the University of Cambridge and a senior fellow of the Johannesburg Institute for Advanced Study. So it's a pretty interesting title he's got there. Just to sum up this article before I get into it, because I'm not going to read it all, this pretty much says he's welcoming a crash because everybody has put all their money into real estate, all these small investors and even bigger investors. But, for the most part, these small investors, instead of investing in other parts of the economy, creating new businesses, technology and whatnot. And by a housing crash, people will stop focusing on this and get back to what they should be doing, growing the economy outside of housing, right? Because housing accounts for a major part of our economy. So anyway, let's see what this guy has to say. And again, I do encourage you to read the whole article. Plenty of homes, too few homeowners. That's the paradox of Canada's housing crisis. There may not actually be a housing shortage. So yeah, digest that part. Plenty of homes, too few homeowners, right? So let's see what he says or why he's saying this. Forecasts of worsening housing shortages start with the inflated price of Canadian houses, which we take to reveal in an excess of demand over supply. To this, we then add immigration figures, which surpass housing starts, to conclude the imbalance will only worsen if we don't ramp up house building. And of course, that seems to be the ongoing debate: not enough homes, too many people. But do we actually know there's a shortage? The telltale signs aren't as obvious as you'd think. Outside of certain markets, the housing stock to population ratio has actually remained fairly stable. Nationally, the number of housing starts has been in line with the pace of new household formation. Meanwhile, the early warning signs of a genuine housing crisis, such as overcrowded accommodations and increased homelessness, haven't changed all that much in recent years. And as for new immigrants, unlike the typical Canadian family, many of them will continue to live together, often in multi generational households, which is the norm in much of the world, such that household formation could even run below housing starts. So I think those are all pretty valid points. Those years of bidding wars, on the other hand, they've been all too real, but it's also possible we've misinterpreted them. We generally surmise that they resulted from a growing pool of home buyers chasing a limited stock. However, it may just be something else is going on, namely an increase in activity by property investors. So this is what I've been saying from the beginning. The property investors drove up the prices and drove up demand, right? So anyway, let's keep reading. In some parts of Canada, up to 2/5 of the housing stock is now owned by multiple property investors. 1 in 6 owners owns more than one property, and the figure seems to be rising. In short, there are a lot more houses than there are homeowners. Too many homes owned by too few people. Over the past few years, anyone with money to invest would have been drawn to property because the Bank of Canada's monetary policy made it a money mill. 100% agree with that. Bank of Canada, government policies definitely have a major role to play in this crisis or in this situation we're in. Economic growth had been driven up by the wealth effect of rising asset prices, particularly house prices. Investors who saw their wealth growing in leaps and bounds felt free to spend some of it, taking advantage of ultra cheap credit to buy both more property and spend some of the gains. But we're going to see the opposite now of the wealth effect when prices are going down and these investors are leveraged. I think he touches on this now. Although few expect an outright crash in house prices, it can't be ruled out. That's because while headline inflation will come down on the back of falling house prices, all those changes in labor markets and the resultant new bargaining power of workers will probably keep the core rate sticky. Inflation will probably return to manageable levels, but not the levels we once knew. And that would mean interest rates stay permanently higher. So, of course, the inflation numbers came out today for Canada, 6.3%, but there is that sticky effect where now workers are paying 10, 15, whatever the percent is. Those prices on the goods don't go down because the inflation numbers go down. They stay where they are. And of course, now workers are going to want more money to buy these goods and to live their lives, to buy food and gas and whatever else. Warren Buffett famously said, "You know who's skinny dipping when the tide goes out." We'll soon know if investors distorted the property market. By early last year, when interest rates were still in the basement, variable rate mortgages accounted for 1/3 of new issuance. If those were mostly employed homeowners whose earnings are following inflation upward, they'll probably be able to take the hit to rising rates by pulling in their horns. But if they were disproportionately investors looking to flip properties or cashing in on rising equity, they may be forced to liquidate some of their portfolio. The added supply could then drive house prices sharply downward. All good points and very true. We're thus probably now at the moment of truth. Given the final stage of the housing bubble last year, a lot of those mortgages are coming up for renegotiation. If a disproportionate number of them were indeed investors looking to cash in, the rush to liquidate could come soon. So, wow, we could have, like I said, a rush or an excess of listings come on the market. And I think we will. It's hard to say house prices have stabilized and inventory will remain low when we haven't even hit this so-called recession we're in for this year. So very interesting stuff. I advise you to check out that guy's article and read the whole thing. Now on to the Korea statistics to see how the national prices look and national trends look. Let's see what we have here. Canadian home sales edged up to end 2022. Statistics released today by the Canadian Real Estate Association, CREA, show national home sales were up on a month-over-month basis in December 2022. All right, sales are up. Things are looking good here. National home sales rose 1.3% month-over-month in December. Actual, not seasonally adjusted monthly activity came in 39.1% below December 2021. The number of newly listed properties dropped 6.4% month-over-month. The MLS Home Price Index declined 1.6% month-over-month and was down 7.5% year-over-year. The actual, not seasonally adjusted, national average sale price posted a 12% year-over-year decline in December. In 2022, we saw one of the biggest single-year shifts on record in Canadian housing activity, from record highs last winter to just below the 10-year average to end the year. So here's the 10-year average of home sales. And at the end there, it looks like it's a little bit more than just below the 10-year average. But anyway, said Jill O'Dill, chair of CREA. That said, the market's adjustment to higher rates may be mostly in the rearview mirror at this point. That could start to bring buyers back off the sidelines this spring. So the market has adjusted to higher rates, she thinks. Housing is more unaffordable than ever before in Canada, and the buyers are going to come off the sidelines. All right, I got it. The housing market story of 2022 was about high inflation and rising interest rates. The 2023 market will depend on the timing and extent those factors move back in the other direction, said Sean Cathcart, CREA's senior economist. Demand for housing continues to grow, and supply remains the biggest issue across the entire spectrum. Whether that plays out in the rental market in 2023 or shifts back over to the ownership space is a matter of how quickly the Bank of Canada can get inflation under control and starts turning the dial back down on borrowing costs. So, of course, he pretty much said it's all up to the Bank of Canada and where they go with the interest rates. If they put them rock bottom again, prices will probably shoot back up at some point, but I don't see that happening anytime soon with inflation sticking around. So here is the aggregate composite MLS HPI year-over-year percentage change for December there. You see at the far right, almost making records in the last 15 years or so. Sales activity or number of sales for Q4, pretty much the same as last month because they didn't have December in there, but it is at an all-time low with the exception of the pandemic in the last 5 years. New listings for Q4 are obviously lower, but they're not rock bottom, but they're pretty low still. And here's our months of supply. It's actually 4.2 months. And an interesting dynamic. So we have ultra low listing inventory, but our months of supply has been steadily rising, meaning houses are sitting on the market longer. Even though we have low inventory, they're sitting on the market because sales are so few and far between. So it's pretty interesting that we see that keep rising when we're talking about low inventory levels. And the months of inventory is probably the number one measure of the overall health of the market. So it's actually coming back to a very balanced market at this point. This chart's pretty interesting. It shows the year-over-year percentage change for the provinces and Canada as a whole at the beginning there. And you can see BC and Ontario, the biggest losers. Saskatchewan, they've lost a good bit too. Alberta has been faring okay. Quebec, New Brunswick, and Nova Scotia have suffered just minor losses year over year. And of course, PEI and Newfoundland are, of course, doing very well year over year, but they don't affect the overall average of Canada that much because of the population. And here's the long-term chart for the average price point in Canada. And I've added a mean trend line to it, the gray dashed line there. I probably put it even a little bit too high, but regardless, the orange line is a continuation of just kind of a prediction where I think the market will go. It's not an accurate prediction, but I just wanted to point out that when you revert to the mean, it doesn't just stop at the mean, and that's where prices would end up, which would put it probably at about 575, 550 or so at this point. It's going to drop below that, and then, of course, it'll come back up. That's why it is a mean line. It just doesn't stay on top of that always. And lastly, the national average prices, 0.6% month-over-month decline in the average price, 12% or just under 12% year over year from December 2021 to December 2022, and 23% from the February peak, or about $188,000 the average house has lost in Canada. So that's all for this week. As always, leave your comments and questions below. And until next week, I'll see you then.